How's it going, everybody? It's Rico from Forever in Profit. Sorry, my voice is a little muffled. Just getting over being sick. In this video, I'm going to be going over market structure, which is what a lot of people struggle with. So I'm going to just be going over the basics. So don't skip over this video if you're having issues. All right, it's very simple stuff. Okay, so we're going to start off right away with an uptrend. So let's actually understand what an uptrend is. An uptrend is actually when the market starts making higher lows and higher highs. So what I like to do is I like to break down market structure with simple movements, okay? I don't like to complicate it. So what I do, let's say for my study, for my notes or whatever, I'll draw out this pattern, okay? So I'll have an up move, pull back. It's for an uptrend. So up move, a pull back, an up move again. So this high gets broken, boom, uptrend. All I do is I wait. If I'm going to be trading this, all I do is wait until I get a retest of previous structure. And if it lines up with some type of Fibonacci, then I can take the trade long again. So this is what I mean. So let's say, okay, we have an up move, a pullback, an up move, it breaks the high. I'm going to look left. When the market starts pulling back again for that retracement, I'm going to look left. And what I like to do is just do a little box around those areas right there. That's what I like to see. I don't like to get in. I don't buy while the market's already moving. So let's say this market, the high got broken, and I didn't get in an entry down here, right, where that pullback is. If I didn't get an entry there, I'm gonna wait till I get a nice pullback again before I get in. Okay, so never chase price. Always wait for price to come to you, and then wait to see if a setup forms, and then get in the market. So I hope that makes sense. Okay, so move on to a downtrend. The same thing for a downtrend. Check it out. So right here will be towards the end of the bull trend, we'll say. So again, we'll have market structure there. Get a little nice bounce. Boom. But what happens is price fails to break that high right there. So price fails to break a high, makes a lower high. And then this is where we get structure break. So right here, right there, is where we get structure break. We broke a previous low, and we also made a lower high. Alright, so that's why you have to be paying attention to these highs and lows. That's why I like to break down market structure like this, with actual, just trend lines. That's how I see the market. I don't see the market in terms of candlesticks. I actually see it in terms of movement like this. So I learned this from Jason Stapleton. In terms of market structure. So let me go back again, continue on what I'm saying. Okay, the downtrend starts, we got a low gets broken right here. What you're gonna get most of the time is this. You're gonna get a nice retest of that area. Boom. Stretch this out. This is what usually happens. The market always retests where it's been. So whenever these lows get broken, I'm always just going to wait for a pullback and see if I can get a better entry in, if that makes sense. Okay, so this will be a bull trend. As we're going into a bearish trend, you'll start noticing the highs get lower and the lows start getting broken. Okay, same thing with the uptrend. You'll see the highs getting higher, and you'll see the highs getting broken, obviously, and you'll see higher lows. So I hope that makes sense. In terms of market structure, what's really important about knowing this is that this is where you line up your Fibonacci. So this is what you do, guys. Okay, let's say now you know you're in an uptrend. All I'm going to do is wait for a retracement. So I know this high got broken. I'm going to wait for this pullback, and I usually like to wait for a 618 retracement. I usually like to see a 618 retracement before I get in. So right here you see how it's pulled back right near the 618. What happens on the 1 hour chart is you'll see sometimes double bottoms. But what I like to do is stay on the 2 hour chart and up, the 4 hour chart and up, the charts I use. What you're going to see is usually some type of reversal pattern here on this pullback, some type of spike, some type of wick to the bottom, and then it'll close all the way up here above one of these really important Fibonacci numbers. So the best Fibonacci numbers I like are 38.2, 61.8, and the 78.6. All right, so if I see a trade bounce off to 61.8, and I already know it's in an uptrend, and it pulled back and it bounced off to 61.8, and it made some type of crazy reversal pattern right here, a huge spike to the bottom, hitting in that trade. Alright, so I hope that makes sense. It's the same thing with the downtrend. So let's say you don't know if this downtrend is starting yet. So all you do is wait for a low to get broken, right? You wait for this low to get broken. You're gonna wait for the retrace, and you're gonna wait for the retest. All right. So all you do, same thing. If you're using Fibonacci, this is what's so important about understanding market structures, lining up your fibs. So I'm gonna do a fib from this high to that low. Right now that we're starting into a downtrend, and as you can see here, price hit the 50%, right? The 50% fib. I mean, it's fine. What all you like to see? Look, okay, sorry. What I like to see is whenever a trend is starting, I like to see it pull back, retrace to one of. I like to see it all the way to the 61.8, obviously. But if it doesn't hit the 61.8 and it just chills near the 50 to 38.2, like Australians doing right now, which I'll show you an example right now. All I do is I wait for a large bearish candle. If I'm going to be shorting, obviously, I wait for a large bearish candle, some type of pattern to show up here off that Fibonacci. Alright, so if I take a trade, my stop loss is going to be above the next one. Does that make sense? So let me try to zoom in here a little bit. Okay, so I'm going to leave that fib there. Put a short position here. Okay, so let's say I see a reversal pattern near that 50%, or whatever fib, it doesn't matter, whatever fib you're seeing rejection off of. Once you see a nice reversal pattern on a higher time frame, like 2 hours and up, I mean the 1 hour is good, but you usually see double tops near the 1 hour chart, so I like to use 2 hour and up. When I see a nice reversal pattern off one of these Fibonacci numbers in line with the trend, that's when I take the trade. Alright, so what I do is, let's say I place a trade, let me see down here obviously because we need a rejection candle first. Okay, and then what I'm going to do is I'm going to put my stop loss. Let's say I took it off to 50%. I'm going to put my stop loss near the 61.8. Alright, usually right above it. I usually like to do it in the middle of two Fibonacci's. So right there, let's just say right there as an example. And then my take profit will be down here. I'll look to a previous low most of the time. So this is what I mean. Stretch this out. Okay, so I'll put a sell in here somewhere, right, when I get a rejection off the Fibonacci. Circle it for you guys right here. So it doesn't matter what Fibonacci number. I mean, it does matter, obviously, but what I mean is, what I like to see is just a rejection off one of those Fibonacci numbers, all right? And then, if it goes in line with my trend, and I have other technicals, let's say I have a trend line running through here. I'll give you an example. Let's say if I had a trend line running through here and it lined up perfectly, like it doesn't line up right now, obviously, on my drawing, but if it lined up perfectly in the market, say like that, see a red trend line, bearish, and price just wicked like the trend line, and it's also closing underneath one of your Fibonacci numbers, that's when you can short the market with confidence, you know. So always use a stop loss, always manage your risk, right? And then what I do is I put my stop loss right above the next Fibonacci. All right, so the next Fibonacci, let's say if I took it off to 50%, my stop loss is going to go right above the 61.8, so probably in the middle or so. That's what I like to do. I mean, yeah, that's market structure, guys. What I was going to say is my target is probably going to be I'm going to look left for a previous low, and that'll be my target. Or I'll use the Fibonacci reciprocals as a target, obviously, or a quarter point, which we'll get more into. But so yeah, like check it out. So my take profit's going to be near this low. Why do I take profit near this low? Well, I know price is going to struggle right here. Just understanding the market structure, you'll understand that when price gets to these lows and these highs, usually what happens is it'll pull back. That's where people come in and buy or sell, right? So what happens is you'll get a pullback like this, and then boom, continue the downtrend, right? Let's just say. So if you notice, all these pullbacks are always hitting market structure. All right, if you always look left, structure leaves clues, right? Jason Stapleton, I mean, he's the man. Structure leaves clues. All you're going to do is look left, and you're going to see if the market has struggled near that price point recently, all right? So, I mean, yeah, that's basic market structure, guys. Of course, market structure gets more complicated. You get head and shoulder formation, inverted head and shoulders, double tops, harmonic patterns, all that, right? But this is the basic market structure that you need to understand and learn, all right? So, so if you don't understand this, watch this video over again. Sorry about that. So yeah, I mean, this is just basic market structure, guys. And this is going to help you a lot with understanding where to place your fibs, understanding where the trend is, lining up trend lines. So right now I'm going to go into trend lines. I'll pull out a chart actually and do the trend lines. So yeah, if you don't understand this, watch this again. Watch this one more time. Right now I'll go into some examples so you guys actually see what I mean. And I'm going to be showing you some market structure examples with those trend lines so you can understand little examples of how you would enter the market. Alright, so it doesn't matter the time frame you're on. I mean, obviously I'm not going to be trading on the weekly, right? It'd take forever, but this is just an example. One second. Okay. And this is let me just give you a quick market structure example. I suggest you guys draw on your charts like this. It's going to help you tremendously. Alright, so we have a high right here. We have a down move, a consolidation, a breakthrough, and then we have a retest of this previous market structure right here. So let me actually just draw it down. Draw on your charts like this. If you're having trouble drawing your charts like this, trust me, it helps a lot. Alright, so we have a down move, a small pullback, and then we have a consolidation that eventually breaks through the low. So right here, this is market structure. We're in a downtrend. Are you going to sell right here, near this area? What did I tell you guys? No, you're not going to sell near this area. You're going to wait for a pullback into some type of previous market structure. Try to line that up with a Fibonacci from this high to this low, and I bet you that's a 61.8 probably. And then you get the drop. Alright. Just try to line that up with some type of Fibonacci. But let me just trying to show you market structure. This is market structure, guys. Understand what market structure is. This. Watch this retest right here. Boom. Boom. You see it? So we're starting a downtrend. I don't know if it's a downtrend. Let me see. I'm confused. Oh, I don't know if this is a downtrend and pulling back. Oh, I just broke the previous low. Broke it again. Pull back right here. Boom, it finally broke it with a full candle right there. Boom, downtrend. I'm going to wait for the pullback. Wait till it hits my area. If I line that up with a Fibonacci, so that's actually lining that up with a Fibonacci from high to low. Oh my lord, 61.8, beautiful. I mean, guys, I'm not making this up. Like I haven't even looked at this chart, New Zealand chart, the weekly. I haven't looked at this. Haven't looked at this pair in a long time. So I'm just showing you examples, just showing you they actually do work. Not making this stuff up. This actually shows up over and over and over again in the market. So we have a 61.8 tap right here. Obviously broke through, broke our low. When it broke the low, obviously came back up for a retest. So this is market structure as well. Let me zoom in. Let me erase this line just to show you. Okay, so okay, leave it like that. Okay, so notice this was your previous low. So I'll actually label out. I'll actually start labeling right now. Change this color. Just bear with me, guys. Okay, so as you see, price made a low here, right? It pulled back. When it finally actually breaks through, what I like to do, if I'm going to take a short position based off the low getting broken, what I like to do is I like to sell on a retest. So like I usually wait for a pullback right here and then I'll sell. And the reason for that is you get a better entry, obviously. I don't like, I usually wait for a pullback before I sell or buy. Get better entry sometimes. So, I mean, yeah, that's market structure, guys. So I should start labeling these out for you guys. Pull back right there. Oh. Alright, looks like right now the market's making higher lows. Oh, this low right here gets broken. Lower high. High gets broken right here. Higher lows, highs, higher highs. It looks like we're going into a downtrend right now, but I think this is actually counter trend. I actually believe the New Zealand's going to go up, but that's because of the Australian dollar, but that's another, I'll be for another video. Okay, so memorize this market structure, guys. This is very, very, very important. I'll actually start labeling it out real quick because I know you guys like to do this. This is a peak high. You can call it a higher high. Start with a high. This lower high. Let's do LH lower high. Alright, so another lower high right here. I mean, it goes down all the way down here. You get lower highs. Right here, you get lower high. Right here, right? But you guys understand what I'm saying. This is how I see the market, guys. I do not see the market in terms of candlesticks. That's only when I'm actually analyzing the rejection levels, right? I see the market like this. This is how I see the market, alright? So you guys need to see it. I mean, everyone has their own different methods and ways of seeing the market, but this is what made me basically take my trading to the next level. You know what I mean? I know that's what you guys want. You guys want to take your trading to the next level, right? You guys want to level up for 2K17, right? The year of the 7. You guys need to understand how market structure works. So this is actually, let me actually label this part. So low, lower low, I'll put lower low, LL. Lower low right here. Broke this low, lower low, come back lower high, and then it peaked out right here. So I'll copy this one. So that's the low, and it looks like market's going up. Okay, so I hope you guys understand market structure. Let me actually get into Fibonacci. So once you understand market structure, then you can actually start doing your Fibonacci properly, obviously. Let's see. Okay, this is a perfect market structure example with what Australian is doing right now. So let me actually show you what I mean. Once again, daily chart Australian. Let's try to understand market structure again, guys. Pull back, breakthrough, low gets broken. What do I expect? Am I going to sell? Am I going to sell all the way down here? No, sir. No, I'm not. Promise me you're not going to sell all the way down here. Please. Wait for the pullback. Like I've been telling you guys, everyone's going long on Australian, and I'm telling them it still hasn't completed a harmonic pattern. But do what you want. Go long if you want. I'm just waiting for a pullback. Excuse me. Let me erase this line actually and start drawing out the box. Okay, so this was the previous low. I want you guys to notice. This was the previous low. Notice how the market broke this low. It's going to come back up for a retest. I mean, it's very simple. I just wait for the pullback before I get in. If I miss the trade, if I don't get in somewhere in here, zoom in. If I don't get in somewhere in here for this drop, I'm going to wait for the pullback because I know it's going to pull back eventually. I mean, no trend can go in one direction forever. The market always pulls back. That's what I wait for, guys. Okay, so this is what I mean. Okay, so it retested previous market structure, right? All I would do is just pull out my Fibonacci. Very simple. High to low, measure it. And once again, like I told you guys, we're right near the 50%. But although I don't like that Fibonacci number, the 50%, what I'm going to do is I'm going to look left and I see there's market structure right here, right? There's market structure. So what that tells me is that this downtrend might continue, right? We're making lower highs. I'll label it right now so you guys can see it. Okay, so I like to wait till the 61.8 obviously, but it looks like we might be rejecting off the 50%. It is the first week of January, so can't take the markets too seriously. There hasn't been real serious movement just yet. So this is what I would expect. It might actually go all the way to the 61.8, which is what I would love to see. But yeah, I mean, this is the lower highs, right? So you have a high, lower high, a lower high, lower low, right? This is low, a lower low. It's the same thing we've been teaching you guys. So you would label that out, just how we've been doing it. So be a high. Make these bigger for you guys. So be a high. We have lower high, LH. And then we have another lower high right here. Possibly, right? We don't know yet. This actually might keep going up to the 61.8, but we'll see. So this will be low, and this will be lower low. All Alright, so you guys are understanding what I'm saying here, what I'm trying to show you guys. Just market structure. Excuse me. How I knew this would be making lower highs, I just use my trend lines. Very simple. I'll actually go into trend lines right now. Okay, so understand market structure. It's like that, guys. Lower highs, lower lows, so on and so forth. The Fibonacci, you measure out your major high to major low. So the same thing I can show you guys right here. Watch. I'll measure from this high to that low. Erase these trend lines real quick, so you can see. Alright, so that's how I see the market, guys. I see it in terms of movement. I don't see it in terms of candles. So we have a high to low here, right? I went over this in my quarters theory video. We have a high to low here. We have a pullback, and right where we pulled back to, 38.2. And I know a quarter point was there, but it's for another video. Don't want to complicate it for you guys. Right here with 38.2, right? That's the rejection. That's what I tell you what numbers are the best. I mean, in my opinion, the Fibonacci numbers I like to trade off of 38.2, 61.8, 78.6, right? Notice also this retest, if I actually start drawing out market structure, you'll notice that price actually struggled right there, came close right here, broke through. When it broke through right here, it came up for the retest. There's a retest right there, that zone, and there's the stop hunt drop, right? So just in case you were selling here, what the market does is make sure to hit all the stop losses first before you drop. So that's why I say, if you're going to be trading off a higher time frame like this, your Fibonacci's and all that, have your stop loss like a good distance away, obviously, right? So like right here, if you're taking off the 38.2, my stop loss would be above the 50, probably halfway right here. But I don't like to do that. Why? Because the 61.8 gets touched a lot. Alright, but let's say I was taking the trade off the 38.2, my stop loss would be above the 50, right? At least the 50 will protect me. If price gets near the 50, it's going to bounce a little bit, and then you can think about taking a trade off or leaving it in, right, to see if it's going to hit stop loss or not. But I would probably, my stop loss would probably go above this wick right here, actually. If that makes sense. Okay, so I would probably put my stop loss above the 50, above that little wick right there, because I know that's a previous pullback right here, right? Lower high, boom. Okay, so now that you guys understand market structure, lower highs, lower lows, higher highs, higher lows, let's actually go into trend lines. So let me erase everything. Pause the video. Alright guys, hope I'm not boring you too much. Next part of the video, we're going to go into trend lines. Trend lines are a very, very important part of my trading. I mean, they can make or break you, I would say. Trend lines are very, very important. Once you see a break of a trend line, that's when you'll see new structure lows, new market structure, I mean. You actually see the market structure being created once a trend line gets broken. What I mean by that is, watch. Okay, here I am on the Australian dollar on the daily chart. All I did for a trend line, right? Remember this for the trend line. All you need is 2 points up to a third point. Alright? So A, B, that's 2 points already right here. I connected to this first wick right here. And then you see reactions all the way through it. I'm showing you this is a valid trend line. There's opportunities all along here. Every time it touches a trend line, there's an opportunity to buy or sell the market. So right here in this case, when it's above the trend line, you're only looking for longs. When price is below a trend line, you're going to look for shorts. So this is what I mean. Okay, so that's an uptrend line. Obviously for a bull market, I'll do a bearish market right here, bearish trend line right here, boom. And notice how price came back up for the retracement, retesting market structure, also hit a trend line. Looks like it's reacting off that trend line right there. So probably make these red. So color code this. Bearish, bearish. Oops. trend line, I don't want to complicate it too much for you guys. A trend line, all you do is connect 2 points, 2 to 3 points, A, B, C, right? You run it through, run it into the future, and you're going to see how price reacts off of it. If the price is above the trend line, you're still going to be looking for buys. If your price is below your trend line, of a downtrend line, obviously, you're going to look for shorts. It's very, very simple. How did I know that Australian was going to go short? Well, I had this large trend line on the daily chart. It broke through. So let me actually show you the breakthrough right here. Erase this circle. Right here. As you can see right here, price had been reacting a lot of times already to this trend line. So it reacted a few times here, a few times here. Big reaction right here, big wick, big doji right there. So it's another reaction right here. So as you can see, price has been reacting to this trend line, showing me, telling me, the market's showing me that this is a valid trend line. Once this trend line gets broken, I'm going to look to go the other way. Very simple. Alright, so price breaks this trend line. When price breaks a trend line, start pulling out your market structure notes. Alright, start seeing, okay, is price going to make a lower high? It looks like it. Is it going to make a lower low? Boom, it did break the low, etc. Alright, so once price actually breaks this trend line, there's a major trend line on the daily chart. So this took forever, guys. You got to have patience in this game. Price broke through our trend line. Right here, we have the retest. There's the retest. On the daily chart, remember this whole day. So this whole day, it was just a doji. So it just moved up and down, closed right there, boom. Then we got the drop off. This was the retest, actually. So let me actually circle it right here. On the 4-hour chart, a 1-hour chart, you would have had an entry right there. Let me go back to the 4-hour chart. Right there. There. Sorry. Okay, there. As you can see, price broke our trend line. And look what happened. Once again, market structure. Look left, market leaves clues, right? Structure leaves clues. Right here. See how price broke through that trend line? It's going to come up and retest. These retests is where you're going to start looking for entries. So if I saw this consolidation phase right here, all I would do is I usually just put a horizontal line right here. And I see how price never broke through. It's taking a long time to break through. Remember, this is a 4-hour chart, guys. This is days, right? Days and days and days. Boom. On this reversal pattern right here, I would have taken an entry short. Why? My trend line got broken. I have a period of consolidation. This is making a triangle type formation, right? I mean, if you draw the trend line out like that, I mean, it's ugly. It's an ugly little pattern, but it's more like a, you just call these box consolidations or rectangles, right? So if you actually go to the Forever Profit website, you'll have the sheets. It's like a semi-rectangle, right? But since it's actually it broke through a trend line, you're looking for shorts, all right? So that's why I'm saying it's below the trend line. I'm looking for sells only. If it's above the trend lines, looking for buys only, right? So I like to do my trend lines on the daily chart, weekly chart, 8-hour chart, 4-hour chart, all right? I always stick to higher time frames, more powerful trend lines. So yeah, also, oh man, this is beautiful. I didn't check this on the 4-hour chart, but check this out. Once actually price broke through right here with that little reversal pattern right here. Also notice, before I go on to the next point, this reversal pattern, large wick to the top, then it closed bearish right there. There's your short opportunity. Whenever you see a reversal pattern with a large wick on one of the candles, on the last candle of the reversal pattern, you're going to start paying attention, all right? Start paying attention to what's going on. Boom, market breaks. Right here. This is just beautiful market structure. I mean, if I had a textbook, this would be probably one of the examples I would put in. So we actually get a break right here. You see that low that just consolidated right here? We get a break through. If you didn't get an entry somewhere in there before it broke through for the breakout, I'm just going to wait for a pullback. Oh my lord, this is just like beautiful market structure example. So as you can see right here, if I actually draw market structure, this previous low, draw it out into the future, we got a retest right there. Another entry right there, boom. See how on the 4-hour chart this actually made like a small double top, hit the trend line. We get a nice, we get a huge rejection right there. I mean, if you had your trend lines, your counter trend lines, I mean, you would have taken a short right there. Broke a Okay, so I hope you guys understand. I talk really fast, guys. Sorry. It broke through, came back up for the retest, and we get the rejection, right? This is what I love about market structure. What I would do when I was actually watching this, what I did is actually draw a trend line out. So this will be a counter trend line. Okay, so if you're in a downtrend, right? We broke a daily trend line, right? We're on a downtrend. If I draw an uptrend line and I know I'm in a downtrend, that's a counter trend line, right? So that's called a counter trend line. If you're in an uptrend and you draw a trend line going down, that's a counter trend line. If you're in a downtrend and you draw a trend line going up, that's a counter trend line. I mean, you're going against the trend, right? That trend line, once it gets broken, you're going back into trend. So what I did is actually drill out like this. Point 1. Let's draw it through. Boom. Lines. Do something like that. Alright. So point 1, point 2, point A, point B, and as you can see, price reacted all along it. Boom. Came up to retest previous market structure. You got a break. What did I say when you get a break? Wait for a small pullback before you get in. Hopefully you get a retest of the trend line. We didn't get a retest right here. I mean, but this was just a long consolidation phase before the real move of the market, obviously, which is a downtrend. So let me actually look at what's going on right now, guys. So, I mean, it's easy to go back in a chart and find stuff, right? But let's actually see what's going on right now. See if we can find any clues. All right, so I know this is a 50% fib, right, that it rejected off of. I'm going to look left. Let me see. Let me see this high right here. Broke right here. Well, this is the high. It's set. I'm going to look left. There is structure. I mean, there's structure right here. Structure right there. See, I'm looking left, guys. I'm looking left. Look left, trade right. Structure right there. So, yeah, I mean, it's retesting previous structure. I actually think it's going to go up to maybe hit that 61.8 I was telling you guys about, and maybe keep dropping, but I have a bigger harmonic pattern on it that I'm waiting for it to be completed before I go long. So let's say if I actually measure out the Fibonacci, high to low. Once again, I'm doing the same thing I was doing on the daily chart. I'm just on a lower time frame, 4-hour chart, right? As you can see right here, we rejected near that 50%. Alright, so we rejected near this 50%. And price is just chilling right here. This is all market closed, right? Since today's Saturday, market's closed, just chilled right here. I expect it to break up a little bit, possibly hit the 61.8 and drop. It might not though, because this is a heavy downtrend so far. We are still underneath my trend line, right, that I did on the daily chart. So we're still underneath it. Whoops. We're still underneath it. So I'm not taking any long positions just yet. I expect it to keep going down, obviously. So I hope you guys understood trend lines. I hope you guys understood market structure. What else? I mean, that's just very simple Fibonacci stuff. I'll go more into probably on the next video, but this is just market structure video. If you guys have any questions, hit me up on Facebook, post in the Facebook group. I'll take a look and I'll try to answer you guys. I mean, yeah, this is just basic market structure, guys. So basic market structure and trend lines, master that, and then you move on to Fibonacci, right? So if you're having problems right now, stop what you're doing, go back to the basics, start with trend lines and start with market structure, labeling it, okay? Circle the lows, circle the highs, label it, do your trend lines, see where you can find trades, all right? So back testing is very important. Back testing is where pro traders are made, guys. Although I will say this, the market is unique in every single moment. Every single day is a unique moment. So although it does look similar to past events in the market, it might not be the same this time. But using probabilities, obviously we're trading with, all we do is trade probabilities, guys. So nothing is for sure in this market. You're just trading with trying to find your edge, right? So an edge is just your strategy. All right. So over a long period of time, if your edge is good, if your strategy is good, you'll have more profit than losses. All right, guys. So that's all you want to focus on. Don't get mad over one trade losing. All right. You're gonna have losing trades. That's just part of the game. All right. So just focus, full focus. Master the basics first. Master the basics first, and the other stuff will be easy, guys. Trust me. So probably the next video I'll go into Fibonacci, guys. So